Sanjay Shah, Chairman and Managing Director of Prudent Corporate Advisory Services. He joins us right now on the show. Sanjay, thanks so much for joining in. And firstly, off business, great example that you're setting out as well for celebrating, 25 years of your being in the business. What prompted this donation to, or rather this gift to your employees of all kinds?
Good morning to all the viewers, and thank you very much for having me on the call, Neeraj bhai. So, as you rightly said, I was completing 25th year of my journey, and it's a service industry where I've been lucky that we got the best of the talent who stood with me for longest period of time. So there was a thought that how can I do something which is meaningful for my employees, and the idea came in my mind that if I can make them the part of my organization by giving them a shares which is owned by me in my personal capacity. And that's how the idea came that anybody who has completed 3 years in the organizations, I'll give the share from my personal capacity. And that number which we thought of is almost about 650 employees. So today Prudent has roughly about 1350 employees, and people who completed 3 years are 650. And I thought, let me give some shares to them. However, when we tried to understand the legality, we came to know that promoter, when they give any share to anybody, they all classify as the quasi promoter. In the sense, today we have a 4 people list in the promoter table. If I'll give share to 650 people, everybody will become a part of my promoter. So it was a bit difficult and difficult to digest also that it was a gesture of gifting the shares. But then we thought, let us reach out to the regulator and say that, sir, the objective is something different, and can you give us an exemption? You not believe the regulator was equally candid enough to acknowledge that this is a very noble cause and we should make sure that we can try and give you the exemption. After an effort of 2-3 months, we got the exemption from SEBI, and I think now it's in the process of gifting the shares.
Nice, but it's a good benchmark for a lot of other people as well to know that there can be exceptions done by SEBI as well. But kudos on that. Now let's come back to figure out that is the business looking healthy enough for you to do another donation in the next 1 year? I'm just kidding. But no, the belief is that the capital market slowdown in recent times would have brought about a small downtick in all capital market businesses. Broking firms have certainly suffered. I wonder if the MF trends and distribution trends have stayed strong enough for you not to, because your October to December quarter numbers looked okay. I'm wondering if the same holds true for Jan, Feb, March as well.
So, Neeraj bhai, there are two parts of the business. One is the mark to market, which is definitely going to impact my AUM because the revenue comes from. So let me first of all tell you, as far as Prudent is concerned, 85 to 88% revenue comes from the mutual fund business. The insurance is also a very significantly large piece of us, which is about 11-12%, and broking is a very, very small piece. The revenue from broking is hardly about 4-5%. Now the mutual fund is a trail-based business, and within the mutual fund, I think the significant thing is the new money which you bring in, right? So if you look at, we are the retail player and we have very large, strong SIP book. So if I tell you number, I think in the month of December, we closed the quarter with 935-40 crore of SIP book. Now, when I'm talking to you, we are close to 982 crore. So these numbers keep my flows and my AUM to a large extent intact. So if you look at, I think when market has picked out at 1 lakh, in September, we were at 1,07,000 crore AUM. When I'm talking to you today, still I am at 1 lakh crore. So market has gone down by about roughly about 18-20%, 22% in the broader market. I am down by 7% on the point to point. We would have added about 6,000-7,000 crores. So I think my AUM is down about some 14-15%, but definitely because at the end of the day AUM is down, so which will be visible in the quarters number.
Okay, but does the impact, Sanjay bhai, come with any kind of a lag at all? And independent of the mix, I'm just trying to understand. Let's say if the mix was not in your favor, would the numbers come with a lag, or would it start showing immediately in a business like yours? If there is a slowdown and reduction of activity, is what I'm trying to ask.
Yeah, so you are absolutely right, sir. So if you look at, there are two part of my business. One is SIP book of 1,000 crore, which continuously going to come. I don't see major fluctuation in the money which comes by of SIP. Now there's a lump sum money which comes where somebody has to take a call of investing 5 lakh rupees. I think the February and the March was little bit dull. The gross flow has definitely came down. The redemption has not yet picked up, but my belief is that when you see the recovery in the market, normally the recovery, when it will happen, my belief is that it will be sold off to certain extent. Because hua kya hai, anybody who has invested in last 6-8 months specifically into the NFOs, where NAV has gone down from 10 rupees to, let's say, 9 rupees, 8 rupees, when that NAV comes back to 10, historically we have seen the retail normally take a call to move from that fund and move to some another fund. So you might see some amount of redemption when the recovery comes back in the market. So that's the reason we believe that next 3, 4, 5 months might be a range bound period from the point of view of flows are concerned.
So let's ignore the next 3, 4, 5 months, Sanjay bhai, and look forward to the next 3, 5 years. What's the base assumption? Based on the trends that you have, based on the feedback that you get from clients about whether the SIPs will continue, whether the PMS flows, etc. I'm presuming you also do PMS AIF distribution, so whether they would continue. And therefore, to your mind, what's the, let's say, the bare minimum CAGR or the average CAGR number that you believe you can pencil in terms of growth for the next 3 to 5 years?
So normally when we talk about the growth, sir, I think one thing which historically we have seen that agar mera SIP book hai roughly about 1,000 crore a month, which is equivalent to 1% of my total AUM. मेरा 1 लाख करोड़ के AUM महीने का 1,000 करोड़ का सिप बुक है. सो ऑन एन एवरेज वी हैव सीन दैट जितना मेरा सिप बुक है उतना मेरा नेट सेल्स रह जाता है. सो इफ टुडे वी हैव 1% अ मंथ सिप बुक, तो साल का मेरा 12% SIP से आता है. अगर वो रह जाता है तो दैट्स 12% शुड गेट ट्रांसलेट इनटू AUM ग्रोथ. Over a 3 to 5 years, we can fairly assume that equity market should generate, or fund managers should generate a return of at least 10 to 12% for the investor. So 12%, 12%, 24% में से भी आप 10% निकाल दीजिए. So I think my belief is financializations, mutual fund AUM growth is a very strong story, and wherever somebody has a very strong retail book, I think 18-20% of AUM growth, which translate into 18-20% of revenue growth, is something which is on a 3 to 5 years, you can definitely take it as a fair assumption.
But that's something that is just arithmetic, right? On top of that, you will enter into newer business segments, you will add new clients, you will do all of that. So therefore, could it well be northwards of 20%? Could it well be 20 to 23%? Those 3% on a 5-year CAGR make a lot of difference, right, to growth. Could it be northwards of 20% as well?
Yeah, so I think bare minimum, I'm assuming that 18-20% should be a minimum which you can definitely project. And there are a lot of, I can tell you, sir, there are structurally, I can frankly tell you, if you want to look at what can be the situation of financialization in the India, you need to look at the 80s of US, where the per capita in between 1980 to 2000, per capita income grew by about 5-6 times. The asset management business grew by 56 times.
Oh.
So we believe that in next 5-7 years, when the per capita grow by at least, let's say, 2-3 times, your AUM should grow by at least 7-8 times.
Fair call. Okay. I have one last question, by the way, one short-term question. Any near-term impact on SIPs as a result of this that you see? Because we saw the number on mid-cap, small-cap funds come off quite dramatically. Part one of my question is that, short-term. Part two of my question is this. In order to execute what you just mentioned, right, over the 3, 5, 7-year period, would you need to, and in order to maintain or improve your return ratios, etc., and all of that, but would you need to raise any capital for executing anything, or would internal accruals be enough in a business like yours?
So answering to your first question, as far as SIPs is concerned, the new flow has some amount of impact in last 2 months. So नई SIP जो आ रही थी वहां पर थोड़ा सा taper down हुआ है, and that might happen for next couple of months, so say 2, 3, 4 months, because historically when the investor comes, he look at last 1 year return, and probably come after 2, 3 months, अगर सितंबर का बेस देखोगे तो हो सकता है 1 year return will start looking at negative. क्योंकि सितंबर से आपका मार्केट फॉल चालू हुआ है, तो हो सकता है आपका थोड़ा सा नया पैसा आना कम हो सकता है, which used to be very very strong for last 2-3 years, but I think that's a good consolidation phase. Coming to your second question, sir, it's a very, very asset-light business which we do, and we generate almost about 200 crore of cash every year, and that money itself is we always look for some amount of inorganic way of acquisition. So, the for me to achieve what we are talking about, I think whatever is required to create the physical infrastructure, digital infrastructure, I think about 34,000 advisors हमारे साथ जुड़े हुए हैं, उनका एक्सपीरियंस भी हमारे साथ लास्ट 10 साल का अच्छा है. So I think we just wanted to continue what we are doing, and it will not require any amount of additional money to be invested. It's a fully bootstrap organization. If you look at when we gone for listing, it was an offer for sale by my private equity investors. So आज तक promoter के पास कभी भी और या तो organization ने कभी भी बाहर से पैसा नहीं लिया हुआ है. It's a 100% bootstrap organization.
Sanjay bhai, lovely talking to you. Thank you so much for taking the time out and being with us today. Really appreciate your time. And of course, keep up the great gesture. Really good to see leaders of corporate India do the pro bono work.
Thank you, sir. Thank you.
All right. That's the view from Mr. Sanjay Shah of Prudent Corporate Advisory. 3-5 year period, doesn't see a 20% CAGR as any issue at all. In fact, he said that that could be the bare minimum that they could do as on a conservative side.